In today's market, making money isn't as straightforward as it once seemed. Everywhere you look, there are rug pull meme coins and low cap projects shouting promises of the next miraculous 100x. And for many new and seasoned investors, it's difficult to separate real opportunity from pure speculation. The problem is that most retail investors are still chasing quick riches. That mindset may have worked in earlier bull runs where institutions weren't heavily involved, but the environment has changed. Today, we are playing in a market increasingly dominated by institutions players, and while retail investors are distracted, one of the greatest opportunities that this space has ever seen is unfolding right in front of us. This opportunity revolves around the participation of institutions and the sheer amount of capital they bring into crypto. Over the next decade, institutions are expected to deploy trillions of dollars into the space, and simply by aligning with their interests could yield massive returns. And they aren't chasing flashy meme coins or the hyped up, insider driven pump and dump schemes that you see plastered all across X. What they want are regulatory compliant, fundamentally strong utility projects, the kind of projects that will form the backbone of tomorrow's financial system. And here's the key: this pool of investable coins is incredibly small, perhaps 50 to 100 at most. Just imagine the returns that could come from simply positioning yourself where institutional capital is the thickest, as all of this money will flow into a few coins. One sector that will receive a massive and enormous amount of inflows from institutional capital is the real world assets sector, or RWAs. Real world assets are the tokenization of traditional financial instruments, including things like US Treasuries, bonds, or real estate, bought on chain so that they can be traded, settled, and used in DeFi. In short, real-world assets bridge the gap between traditional finance and blockchain technology, giving institutions exactly what they need: a foundation to build, scale, and run financial systems more efficiently on than ever before. A project that is doing this exceptionally well is Ondo Finance. What is Ondo Finance? Well, it's a platform focused on bridging traditional financial assets into the blockchain world. Their main products include tokenized US Treasuries and other yield-bearing instruments that allow investors to gain stable, regulated exposure to traditional investments on chain. In simple terms, Ondo takes the safest, most widely used asset in traditional finance and makes them accessible to crypto investors and DeFi protocols. At the center of this ecosystem is the Ondo token. It's used for governance, such as allowing holders to vote on proposals, upgrades, and future development of the platform, and also plays a role in aligning incentives between the protocol and its community. Over time, as Ondo Finance expands its offerings and integrates deeper into DeFi, the token's utility is expected to grow. Now, their future is also very bright, with their roadmap centered around expanding its tokenized products and scaling integrations. They're working on broadening up their lineup of tokenized assets beyond simply treasuries, building deeper connections into DeFi protocols, and expanding into global markets where institutional demand is strongest. Each of these steps matters because it positions Ondo not as just a single asset platform, but as a global financial infrastructure provider on chain. More assets, more integrations, and more adoption all translate to stronger demand and greater utility for the ecosystem and its token. And on top of all of this, Ondo is creating its own chain. This will allow Ondo to gain the ability to control performance, regulation, and integrations at the base layer. This means faster settlement times, lower fees, and direct pathways for institutions to onboard securely. It also removes reliance on other blockchains that might not be purpose-built for real-world assets, ensuring that institutions have a chain designed around their needs, such as efficiency, transparency, and compliance. For investors, this is huge. It means a stronger ecosystem, more adoption, and potentially more demand for the Ondo token as usage grows across the chain. Now, the big question is, will institutions be drawn to Ondo Finance? And the answer is yes, they will be. Why? Well, Ondo Finance is providing institutions with what they've been waiting for, which is compliant, regulated access to yield-bearing assets on the blockchain. For big players, this means safer, more efficient, and more transparent ways to deploy capital. Instead of being bogged down by traditional financial intermediaries, they can gain exposure to the same instruments they already use, including treasuries, bonds, and fixed income products, but with the blockchain level efficiency and accessibility. This is why Ondo is positioned to be one of the foundational projects in the real-world asset sector, and why institutional adoption could drive enormous growth from here in the years ahead. And Ondo Finance isn't stopping with tokenized assets. They're building Ondo Chain, a blockchain designed specifically to support and scale real-world asset adoption. Instead of trying to be a general purpose chain like Ethereum or Solana, Ondo Chain will be optimized around compliance, settlement, and the unique requirements of institutions moving billions of dollars on chain. So to summarize, Ondo Finance has enormous potential moving forward, and it's for very good reasons. I do not believe the current valuation of the project will affect its long-term performance, as billions, potentially hundreds of billions, will be flowing into the real-world asset sector, and Ondo Finance is one of the best RWAs that the market currently offers.